So today's jobs market data showed wage growth in the economy, especially in the private sector, running uncomfortably high. So one question that kind of arises from that data is whether the UK wage problem is bigger than the euro area and the US. I would argue it is, and mostly because the UK inflation problem is bigger than in those two economies. And that's essentially because it's experiencing the worst of both problems. It's dealing with the energy price shock that affected the euro area, and at the same time, it's dealing with a tight labor market like the US that's kind of also pushing up on wage pressures. Will this be solved on its own? It could be that, the kind of increase in wage growth is just a cost push shock that fades on its own as inflation fades and as the labor market cools a bit. But the risk here is that the Bank of England doesn't think that will happen and thinks that there's been kind of a change in inflation psychology, or that there's some kind of persistent that it needs to react to. The second question that I think it's relevant out of today's labor market data is we've seen the participation recovering back to pre-pandemic levels. Does this mean that the UK labor market challenges are over? I would say not. It's a bit hard to assess what should be the prevailing participation rate in the economy right now. But if we take the participation rate in the run-up to the pandemic and we control for population growth, that still shows that there's around 200,000 workers missing in the UK. In our models, labor and employment has contributed to 30% of the growth in potential output in the decade running up to the pandemic. And our forecasts show that over the next decade, labor will only contribute 11%. And that essentially implies that there will be a deceleration in the potential growth of output and of the economy. And that, of course, just means less prosperity for everyone. So that's something we should definitely care about.